come. I mean the chart on the current. This is gold, current gold. It's loading. Yes, hello. Hope you guys are doing well. So let's just give some time to the members that are joining us uh, as we prepare to have the session. Yes. So other members are coming in, so you can just be around as we join. Yes, the other guys are coming in, so we'll have a lot to learn today. You can just brace yourself up, have somewhere to write, have your questions ready. You can write them down and we shall go through them. Questions to do with entries, trade entries, questions to do with money management, psychology, all of that, we shall be able to tackle them. Yeah. So if you are familiar with our works, you would have come across some of the daily analysis that we do almost every day and every week. Some of them are always shared on the Telegram group. So you may have come across some of those analysis by Throne. And some people sometimes they have questions and they have not been able to reach out. But today I think it is the day in which some of the analysis you've seen maybe, and you have some questions, you will be able to ask them, and then we can be able to have those answers and those entries explained in detail. Yes. Yeah. So as we wait for the other members to come in, so you can prepare those questions, have them ready, so that when the time for asking them comes, you can be able to freely ask, because we're going to do a lot of work. I mean, a lot of analysis and then psychology. Okay. Okay. So there are things I will have to explain. Of course, the strategy and how I trade. It is very important that we first establish that. Once we establish how exactly I trade or the strategy that I trade, then we can be able to go on to illustrate the strategy or put it to test the practicals of it. We have them. Like if I'd say this is where we enter and this is where we exit and this is how we manage the trade, we have to get those clear examples and then we illustrate them carefully. And then we are able to also get good examples on how we took some of the trades, because all the trades are there. Been taking trades like jointly with members, especially those in the group. So we'll pick maybe the last 4 or 5 trades we've taken, and then we will be able to subject them to the strategy and see how effective it is or the strategy is. And then finally, we will also talk about money management, because it's very important. Once you have the strategy in play, you know how to enter, how to manage the trade and exit it. You need to know how to be able to not lose a lot of money anyhowly. So that is part of money management and it's very important, it's very key in trading. And then finally, we can finish up with a few psychological tips that can be able to help you enter a trade with the right strategy, manage it with the proper knowledge, and then have the mental edge, which is the psychological part, for you to be able to either hold it or for you to be able to rely on your trading plan. Yeah. So once we have this in place, then we will be good to go, and then you can prepare your questions and answers. I mean your questions, and then we'll be able to answer them. Okay. So that is the main thing we are going to actually have today. Okay. So we're just going to go and do that in a few. Uh, okay. I hope you guys can see my screen visible and then clear. So if you guys don't mind, I could change the colors because the colors that I usually use are these ones. These are the colors I'm familiar with, and you guys could be familiar with. But it may actually disorganize you a little bit. Okay. So that means we could just go with what we have. I don't know whether this is clear to you. Please make it dark. Okay. Yeah. So like I had said, we'll start with the strategy. We would like to know exactly how we trade. And that the strategy part is important because that's what we use for entries. Okay, I think this will be okay. Yeah. So like I had said, we will be going through the strategy, money management, and then psychology. These are the three things we will be able to tackle. So once we're done with these, we can be able to go and explain that. So let me illustrate using gold, or I could use any pair that is what you guys would like, but I would like to use gold. Okay. So the way I trade, the first thing I do is be able to mark. So the strategy I just call it like price difference. Like I want to trade the differences in prices. So it's all about price, but then it has to be like price difference. So I usually call it like PD. That's what I trade. It's not very different from what else is traded. Okay. So that is what I usually trade, call it like price difference. And then now, so once I'm going to explain what price difference is. And then this is the first thing I mark. And then now the second thing, which I also focus on, is marking my highs and then lows. So these are the two things I usually look out for: price difference and then also my highs and then the lows, I mark them. So the moment I have the highs and the lows marked and my price difference is marked, then I can begin to look for trading opportunities based on that. And then now for the entry part, I look for patterns. There are specific trading patterns that I look for when I'm trading, when I want to enter a trade. And these patterns that I look for, I look for them at lows, highs, and price difference areas. So once I have this clearly, then now all that I have to do is enter the trade, manage the trade, and then also have the right mental age to continue to stick to the plan. So, and this is what I'm going to take you through. So let's start with the first one. What do I really mean by price difference? So with price difference, I just want to, so I'm going to abbreviate it as PD. I just want to get the difference between the highs and the lows that have been created by a strong candle momentum. So let's say if I have the market trending to the upside, giving me higher highs and lows. So we have a high, a low, a high, a low, a high, and then all of a sudden we have this strong break that one single candle, one time framed single candle. So by that I mean it can be one strong 4 hourly candle, a daily one, a monthly, or even a yearly. So once I have that strong candle break, then now this is what I call like the price difference candle. This is the candle that has created the difference. And it has to be one candle, one time frame. So if I'm on the monthly time frame, it has to be one monthly candle that is bearish, strong break, let's say some good number of pips. Okay. And then the next thing is to find the difference between this high. So this will definitely be the high, and then this will be the new low, the new lower low that is being formed. So price difference is finding the difference between this high and then this new lower low. So once I get that, which will be always here the low, the previous low, which is broken. So the market goes up, creates a high, and then comes to form a new lower low. So by that, it takes away the previous low, the previous nearest low. So this then becomes the price difference areas. This is the PD. And then this is the area in which if price pulls back into this area, that is where I look for trading opportunities. Okay. So the thing I want you to notice now is that at price difference areas, that is actually where resistances are formed. So price difference equals to resistance areas. So that means with this strategy here, if you can be able to understand price difference, you can know that this is where the resistance is going to occur, and that is where you're going to look for trading opportunities from. Okay, so the opposite of this can be for the bears. So let's say the price is trending to the downside, okay, forming lower lows and then highs, and then all of a sudden you have that strong break. So this becomes your price difference, and this is where we look to buy the market from. So this price difference area here, this will also be like price difference equaling to support area, and this is where we look to trade from. So let me just show you a practical example of this, then I will go to some of the trades that we took. Okay, so let me just go to this pair, Euro card. I could go to any pair I like, but let's start with Euro card and then we look at that. And then let me go on the monthly time frame to illustrate what I'm saying. So the rule is we need to have a strong single candle that breaks a previous low when the market was trending to the upside or to the downside. So like this, if you see here, these are the types of a candle I'm talking about, which is this one here, this strong break, because you can see there's a low here and then the market forms a high, and then from here comes down, and then there's this single candle break. So this candle here, that is what I call like the price difference, this one. Okay, It has to be like smooth, strong break candle. And then maybe the average pips on the monthly, maybe around 600 or 500, between 400 to 500. So once I have this, that is my price difference candle, because we had these previous lows, these ones here. These were the lows, and these were the highs, and this is the new lows that were formed. So now the trick is to find the difference between this high and then this new low. So once I find that, and that is where the break actually occurred, that will be here, this low here. So this is what I mark. Okay. So once I mark it like that, this area here, that is where I'm going to wait for trading opportunities when price pulls back into these areas. And there are two types of pullback. The first one is the immediately. The candle that is next to that can actually be able to pull back into that. And then sometimes the pullback occurs like later. So that kind of a thing. So this is the area in which uh, I look for trading opportunities, because that is where the support or the resistance is going to occur, for if it is a sell or whatever the case is. So this area here, that is where I look for trading opportunities when price uh, returns to this. So that's the first thing we do. Then the next thing I want to explain to you is also, let me show you maybe some examples on how we actually took some of those trades practically. So I can just go to the Telegram group. This is the Telegram group in which we share, in which I share trades. And then from this Telegram group, I could just go to the last 3 or 4 trades that I took, so that you can actually see this principle in application. So it's not like bluffing. This is what we do. Okay. So I could go there, and then I begin to share exactly some of the few trades we took. Okay. So this is some of them. So this is an analysis of gold. The first trade here, this is gold. So I had analyzed it. You can actually also find it on YouTube. I'm going to show you where to find some of those analyses. Okay, but this is the gold trade. Actually, this is the video which we did on. You can see this is when we did it, like before the elections. We're talking about the US election impacts in the markets, and then in this video, was able to explain in details how we could actually take advantage of the elections and then be able to make some money. Okay, so if you're going to watch that video later. So and then now coming to some of the trades which I had taken, the nearest one which I had sent, there was a Euro GBP trade which I had sent. Yeah. So okay, so I'm going to show some examples from the trades that we have taken from the group. So that's why. So going back, these are some of the trades we had taken throughout the week and the group. So these are some analysis we had done, and then also uh, some of the trades we took based on this strategy here. So I can just show you starting. This is gold. The video for the gold trade is here. So we had done analysis before the elections on how gold is actually going to play out. Then it played out exactly the way it did. And these were some of the trades we took. Just want to see this gold trade, the place where we said we'll take them. So that is it. But then before the elections, we also had a trade which was on Euro GBP, which we also took. Okay. And then also we had uh, so we had CHF JPY. I know some of you are not so familiar with this trade, but it's the same principle. If it works for any pair like Euro GBP or CHF JPY, it could work. It works for any other pair. So we had this trade, which I also sent in the group. You can see on 25th of October. And then there was on that. These are different analysis. Okay, I'm talking about the trades I have directly sent. And then there was Bitcoin trade. This is it. On 21st of October. So we had a trade on 21st of October, which was the Bitcoin, and then on 25th. Okay. So, and I'm going to take you through how we actually took those trades in a minute. But this was the analysis. So I kind of do the analysis before. Okay. And then once the trade has given us the entry, then I send it in the group. Okay. So that is how we have actually been putting this strategy to the test. So it's not something we are gambling with. It is something that is practical and you can actually depend on it. And this is what I usually say to the students that we interact with. I tell them that if you took 10 trades using the strategy I teach you, and then you lose all of them 10 trades in a row, you can DM me and I can have a discussion with you. And if possible, if I prove that you took the trades, that you lost 10 trades or 5 trades in a row using the strategy, then I can do something for you. Maybe refund you or something like that. But of course, this is not a selling point, but it's a point so that you can know that this is practical. This is something which can be applied. Okay, so that is what we had with this. So you need to know that this thing I'm telling you, it is workable, and then you can also depend on it. Okay. So once we've established this, I can come back to the charts and then I explain the other things. So this is the concept of price difference. And then from there, I will talk about entries, how to actually enter trades. Okay. So the next thing, of course, like I had said, is to mark your lows and then also your highs. So once you've marked your price difference, then you mark your lows and then your highs. Now, the lows and the highs I talk about here, these can either be the highs and then the lows of a day, a week, or even sometimes yearly and monthly lows. So to just illustrate that, let me mark. So this is like Euro GBP on the yearly. So sometimes I swing trades. Okay, I wish I could show you on my Instagram. So I swing trades. I think the biggest trade I've swung was for about 6 months, and that was GBP CHF. But I'm not saying everybody should turn into a swing trade. It's just a principle. If you want to swing, you go to a higher time frame, then you get an entry on a lower time frame, and then you can be able to hold it based on the higher time frame perspective. Yeah. So these are the lows you usually mark. So I would mark my yearly low like that, and then I will also mark my yearly highs. Once I have marked my highs and then the lows, then I can always come to a lower time frame, which is the next lower time frame, which will be the monthly or so. Then from there, I also mark my price difference, okay, which will be this, and I continue to mark any lows that I see and any highs. So usually once I have that, then I continue to, because I don't see much here now, I want to understand price here. I usually come to a lower time frame, which will be the weekly. And on the weekly, I also do the same thing that I've been doing, which is can either be a price difference or I mark a high or a low. So for this case, this will be like the price difference here, okay? And then these will be the lows, okay? So it's just something like that. So now to save time, we know we are trading around here. So I will be focusing on this. So for me to understand price more, I have to come to a lower time frame, which will be the daily. So from the daily, that is where I will actually also mark the same thing. Okay, so on the daily, you can clearly see here that this our resistance area. We have an area price has failed to break. Okay, so these ones and then this price difference, and then we have a low here, and then the same thing I talked about, which was the price difference candle, which will be this. So you can see this is a one candle. So this is a daily candle that has broken below. So what lows has it broken? That's the thing we need to mark. So this will be the low because you had an area of lows here. So this exactly. There's a reason why I've not put it anywhere, but these were the previous lows. And then this candle here created a difference between this high and then this new low in this format. But if you usually extend it this side, you realize it corresponds to the structure which was here. Then now, according to the way I trade, the thing I would want to see is if price can be able to pull back into this and then gives me a pattern here, that is what I will trade. So then I can now come to another lower time frame, which will usually be my 4 hourly. So on the 4 hourly, the best place to trade is when price reaches here and then gives me a confirmation. Okay, so this is just as simple as that, and how I analyze the trade, and then also potentially how I get entries. Okay, so I'm going to show you an example with the trade that we took. I had shown you Euro GBP and then maybe gold and CHF JPY. Okay, so this is just to illustrate you the strategy in the simplest term. So you can put your question somewhere, you will ask them in a few. Okay, so I just need to show you the trade we took. So the last trade was gold. That was the US election thing. I will show you the video later, but let me go to the euro. Let me start, I think, with the gold trade. It will make more sense because it was the most recent uh, trade we took. So another thing you need to be familiar with is the data feeds, either Owanda or FXCM or Forex.com. So I usually like to use Forex.com. The data feeds of Forex.com, they are more decisive for me. Okay, so in order to save time, I'm just going to stick to the 4 hourly. Okay, but remember the same principle. That is what we trade. So if you watch the other video I showed you in the group, this was the area in which I was looking for the trade. Okay, and the reason for that was because of this price difference, which I've already explained. So we had a strong break here. We had a market pulling back because we had our all-time highs here. Okay, and then we had the market pulling back. We thought it would be, now people were waiting for an entry maybe around here, but then we had another price difference. So once we had this, so this is the area in which I had said this is where the resistance will be formed. Okay, and then we also had another price difference area here, this break. Okay, now to some people they call it fair value gap, but to me it is the difference that price creates between a recent high and then the new low that price forms, and that is where I get to look for my trading opportunities. So once I have that like that, and if I'm to analyze this now, there is also another price difference area here, the whole of this here. And remember, we have form C coming at 10 p.m. our local time here. So when this form C comes, there would be a possible reaction of price around this region here. So this is up to date. This is the current. And then, of course, we had another price difference here because there is a break. Okay. So let me illustrate it like this. Okay. So this is what I've marked. Once I've marked areas like this, so the next thing is, which is the most crucial part, is how to enter these trades, which is the entries part. So let's say you have understood the concept of price difference. which you can confluence with any other thing. So I'd say the price difference place is where the resistance are formed. So let me just put it like this. So PD equals to, so price difference equals to resistance or support areas for the buys. So if like this is where the next support would be. And then here, this is where the resistance will be. These are resistance. Okay, now I'm going to put this in the context of the trend. Because for this now, the trend has not totally changed. It is still a downtrend because we haven't broken these other highs. This could be just a pullback. So we'll determine whether this is going to be a strong downtrend when this one is broken. Now, once I have done that, the next thing is how to be able to enter. How do I enter? So I usually come to my lower time frames. So let's say I'm in the 15 minutes, sometime 15, 1 hour, and all of that. At the price difference areas where I've marked my price difference areas, that is where I look for patterns. Okay. I know this is a little bit old school to you guys, but if you went to the Telegram group and checked the last 10 or 5 trades I've taken, you would see that even old school works. There is an association people have with people think truth, people confuse truth with the trends. Traders believe that smart money or ICT concepts are the best strategies out there, but they forget the fact that ICT and smart money concepts are just the trending things. That is the most trending strategy. But if you study the history of trading, before people were trading with indicators, people were actually plotting their own chart in the early 80s. And then it comes the 90s up to the 2000s, people were using indicators to trade. And then from there, people went into price action where they're using support and resistance and then candlesticks. And then, especially from 2016 onwards, especially 2019 and 20, that is when price ICT and also smart money concepts came in. So now if somebody comes into the trading space and sees smart money and ICT concepts, they will term it as the best strategy. So the point I want to make is that whatever is trending is not necessarily the truth. The truth is that can you make money with whatever strategy you are using? Can it give you that edge? So once you've established that, then you're good to go. Okay, so for once, don't think too much about support and resistance and all of that. Think about how this can be applied in theory, in practice, and then also judge some of the examples in the group. You can go to the Throne group and then look at them. I'm not saying I have 100% win rate, but this is what works. Okay. Anyway, so let's come. So this is the post-election video I did in which I analyzed GBP USD and then gold. So I just want to show you why we took the gold trade. So I explained once you have marked your price difference area here, the moment you have marked it like this, so the next thing is you want to wait for price to touch that area because like I'd said, price difference is where the resistance will be formed. The resistance is formed in the price difference area. So if you're trading support and resistance, then you will look for that, and that is what you will trade. Okay. Then now, if you're somebody who trades, let's say order block and patterns and all of that, that is where you also look for your order block, which is just bearish engulfing. Okay. So you need to also be familiar with the terms. So once you have that, then you look for them. So let's look for one. So now, if you're somebody who trades basic price action, support and resistance, you will see here, this is a high, and then the market comes to form a new low, goes to form a high, and then fails to break this other high here. Okay, so from here, you just want to see price, and then the entry is going to be so it's like what I usually trade is like either double confirmations. This is where I know the market will turn. But instead of putting my pending order here, I want to see another double top being formed here. Now the patterns, either double top, bearish engulfing, order block. That is what I want to see. So if you can see carefully here, this is the place. And then on this bearish candle here, not this one here. So you want to be also very careful with the entry, not this one. Because if you look at this one has not cleared this high. So you want your fake out false breakout. So this one seemed to have broken out and then breaks back inside. So once the market has done a fake out here, then that's when you want to have the trade entry on this level here. So this is where you would have your entry one. But remember, because we're on the lower time frame, this still holds. And then of course it completes this low. Okay, now this is where you come and talk about the management. So let's say this is the low which was formed. Okay, so this low has to be completed. So this is the high, and then once this low is completed, this is where, of course, you will have your targets. If you add an entry here, based on this fake out, you should have your target below this. And then you are done with this quadrant, like you're done with this move. And then still depending on this, whether new lows will be formed. So if the market has formed new lows like it has done here and pulls back into this area, the chances of this new low to be completed will also be high. So the next thing is you wait for a pattern here. So the same thing, if you trade a fake out, so this is the fake out, which will be also another resistance. Okay. Now, in another video, I'll explain exactly how you can actually take advantage of this. Okay. Now, there is a scenario whereby the candle can be so long. If it is so long, that means your stop loss is going to be up here, which will be a hindrance. So there are some, if it is too long, sometimes you look for either that entry, which will be like with your order block, because if you can see, this is quite different from this. But this is definitely where your entry will be, and your stop loss will always be above the structure, even here. And then, of course, the target would be here. But remember, there is a new low which was here. So this low has to be first completed. So you will have your first target here. And then once this is completed with this candle, and then a new low has been formed, and then this will eventually be completed. Okay, so the next price difference area is actually here. And this is where we actually got the trade. One of the trades was around, yes, around here for the gold. I think if you were attentive, you've seen it. And then the next entry was also here because we had this as a price difference area. Okay, so from this price difference area, this is a low and then a pullback, and then we formed another resistance here. This is another resistance if you can see it carefully. And then we had an entry. Okay, and it was like that. So now this is for form C. Like this is live now, live market. And this is what could happen. So what I want to see for maybe form C, because gold is still bearish on the 4-hourly, if you can see it like from here, on the 4-hourly gold is still bearish. So what would I want to see is, I want to see a W, I mean an M or a fake out here. That's when I can actually trade it. Okay, so I've already marked that. So I want to see this. So if I can see a pattern here whereby this pulls into this area, and then from here gives me like a low. Okay, because we already have a low which has been formed here. So now what could actually happen, we could have a lower low, and then if it pulls back, especially on the 15 minutes, and I see a fake out here, then I can have an entry. Okay, and this will be the first target, and if this is broken, then I can target the lows here. So the whole idea is this: I want to have double confirmations. I already know from price difference where resistances are formed. Okay, and then now once I know where the resistance is going to be formed, I want to wait for a double confirmation. So it's like two resistances, or what you would have. So if price reaches my resistance, I want to have another confirmation before I can be able to enter. And those confirmations can be in form of new lows being formed, or a fake out, an order block, like you would put it. Okay, and then I can actually be able to enter the trades. Now, this concept here can work on any time frame, but of course, it's important for you to do your top-down analysis where you analyze the market from a higher time frame, then you come back all the way to a lower time frame. So this is exactly what I trade in simple terms. So I think our time is going very fast. So, but the next thing is now, if I enter a trade, what do? I want to be able to calculate my risk. So this is where I go and I look for my Forex calculator, because I don't want to jump into trades anyhow. I want to have a trade with the proper risk. Okay, with proper risk, so that I am able to. So you go to your Forex calculator. I'm trying to get it here. This one will work. Okay. Okay. So once I have it like that, let's say I've got my trade entry, which is gold. Okay. So let me just come to the trade we had taken. I think the trade was here because of this price difference. Okay. So something like this. So let's say if I've gotten the trade here and I want to enter it based off this bearish engulfing. So if my entry is going to be after the close of this bearish engulfing, that means my stop loss will be above the structure. Okay, so this is gold. You see, you're seeing 864. This is just about 80 pips. And then I will be targeting this low. Okay, depending on the structure the market has given me. So there is an overall low here. So we'll be targeting this other low here. And this will be a 1 to 3 trade. So I come to my Forex calculator. I know the stop loss is here around 80 pips, 864. Gold, you always divide it by 10. So I come to the currency. If it is in dollars, I leave it like that. And then the pair, if it is gold, you look for the gold pair, you input it, and then see we are selling, of course. So you come and click on sell, and then you put your uh, opening price, which will be the price at which the candle closes from. The opening price is this. So this price 2741.07. So that's what you put here, 2741.04, and then your closing price will be where your stop loss is. And then I'm just in a hurry to save time. And then once you press calculate, it usually gives you the lot size. I've not completed the figures, but I just want to show you how you do it. Once you press calculate, it will give you the volume or the lot size. And that is what you input. And you'll have to also put the amount you're risking here, whether 1%, 2% of your account, so that you predetermine exactly how much you're risking, so that if the trade is pulling back, you're not worried of blowing your account. So once you have that, then you can actually be able to see the trade through. You see it through, and then it will give you that confidence. Then now the last psychological thing I would want to give you, once you have, let's say, once you have marked your trade and then you have entered it, the best thing you can always do is to, I just want to explain to you one psychological trick that you can actually put to work. And I want to illustrate it using this concept of problem, reaction, and then solution. So you have to treat or consider this as a problem, a situation. So any problem or any situation goes through these stages. The first stage is in which the problem is defined. Then the next thing is the reaction that is either going to come from you or from another one, and then the solution. These are the three stages of any situation. The same thing, if you have entered the trade like you have entered here, just know that this is the situation or this is the first stage, then a reaction will be there. The reaction can be in form of a pullback, it can be in form of price not moving very well or price moving aggressively, those things. But the solution is the decision either for the price to hit your take profit or hit your stop loss. That is the solution to any trade that you have taken. Depending on your trading plan and how much you trust your trading plan, so the trade can either hit your take profit and then it is solved. It goes through the circle of problem, reaction, and then solution. These are the three stages the trade goes through. So the issue comes usually at the reaction stage. You find you add more entries. Let's say you have calculated you are risking 2% on this trade. You are trading maybe 5,000 or a prop farm account. You've risked like, let's say, $1,000 or $500, and then the trade reacts, the pullback, and then on the pullback you add another risk. That makes your total risk 5%. And then now the pullback continues, you panic, you close it in negative, and then the trade drops. What you have done is that you have not allowed the trade to complete the circle of problem, reaction, solution. So if you are really determined and then you plan, you'll be like, okay, this is the problem. The problem is I've entered the trade already, I have my stop loss, it is going to react. The reaction will be in form of pullbacks. If it pullbacks, I've already predetermined my risk, I'm not going to add another risk. That means I will not. So it reacts, it pulls back, you just hold. And then it comes and hit your solution, the trade is solved, you move on to the next trade. Or the next solution can also be the stop loss is hit, you have lost only that percentage you calculated, 1 or 2%, you move on to the next trade. So the moment you begin to treat your trading like this, you know where you're entering from, you know how you're going to manage it because you know the amount of money you're risking, and then you let it react without you reacting. So the trade react and you also react. There's if you can go to my Twitter or X, I tweeted that the market that we trade is more consistent in showing or in producing patterns than the trader that trades it. So the market is consistent in showing patterns than the trader that trades the market. For us, we trade based on our moods, on how you've woken up on that day, based on our habits, the risk appetite, and all of that. So we are not constant. But the market will continue to give you your order block, it will continue to clear the highs, the lows, it will continue to give you your support and your resistance, your other patterns without fail. It does its work. So the only time you actually miss is when maybe somebody has blown his account or he has taken a break from trading, but the market never breaks. It's like the sunrise. The sun rises every morning. So if you ever find yourself not seeing the sunrise, maybe you are the one who has died or you are in another planet, but the sun continues to rise every morning. So it's the same thing with the market. The patterns will continue to show. So you don't want to react and take trades which you had not planned or do impulsive trading. So basically, this is just what I want to share with you. But if you have any questions, you can let me know. You can either type your question or you can send it to me or you can, yeah. So I want to take in some questions if you have. And then also if you can still just text me on Telegram. I use AJ. Okay, Throne AJ, you'll find it there. You'll find it there. So let me just show you some of the pages. I also this same analysis you'll find it on the YouTube there. From, I want to show you. This is okay, so let me just show you the YouTube where I actually post most of these videos. I do analysis and then I put them there, and you can actually find them there. So okay, so this is the channel. You can just come there and look at some of those trades which I do post. I put them like continually, so you can always find them there. And then actually we do a weekly recap. And then everything that I've actually tried to show you here, you will find them. You'll find them here. Okay. So they're all here, the price difference, the trades that we took, so the signals we sent before they play out, everything, find them here. Also, you find the same thing on TikTok. Okay, so we just do this analysis, and then also This was the video before the elections and how they played out. If you watch it, you will actually see some of those entries. Yeah, so this is what I wanted to show you, and then I think I can just take in your questions. If you have them, you let me know before we can call it a day, or you just text them to me on Telegram with the questions, and then I will be able to answer them. And then you keep waiting for the weekly outlook, especially on you find them on the Tamam brokerage page. So thank you for coming in. I appreciate, and also we are grateful to Tamam for continually providing educational services to people. And these are not just mediocre services. These are services from very experienced traders who have more than 4 years, 5 years experience in the game, and who have also tangible results, which are practical, which can be tested. So what I'm saying is, if you understood what I've explained to you, that is very good. If you still want to understand more, the videos are there, the examples are there, everything that I explained to you is on YouTube. The videos are on the average is 3 minutes, so you can watch them. And then better still, you can just send me a message. I will be able to answer you, no charge. So maybe let me put that word. It's going to be free of charge, so you don't need to worry maybe that you will charge me. Okay. So if you have any questions, you can bring them in. Otherwise, we have about less than 10 minutes to call it a day. You can check out the Telegram group also. You find all signals there for free also. Yes, so we have like 2 minutes. If you have any questions, you can let me know. So let me see somebody. Okay, somebody was saying, how do you analyze from higher time frames? So what you do, you just go to your highest time, which usually, for me, I usually go for yearly. Then I come all the way to the monthly. So you can do that. But then you mark your price difference, you mark your highs and then your lows, and then you come. If you don't see a high or a low in that time frame, let's say if you're on the monthly and you no longer see the highs or the low, you can come to the weekly. You look for the highs, the lows, and price difference. Once you've marked them, you come to the daily, you come to the 4 hourly, and then you can come to your entry time frame, which can either be 30 minutes, 15 minutes, whatever you prefer. You look for double patterns. So where there is a low, you wait for a pattern. So the whole concept is I just want you to be able to sell high and then buy low. Okay? It's just the basic market principle of selling high and then buying low. Yeah. I think that is the question the other guy had sent me in my inbox. So if there is any more, you can let me know. So I don't see. Okay. All right. I think we can call it a day. Thank you for joining in.